Okay, let me go ahead and share the stream real quick. All right. So let's get started. So this can be, like I always say, an online journal for me. Okay. So I blew the account off of a stupid decision that I made. And I want to harp on this because I tend to make this mistake once in a while. I used to make it. It was one of my pitfalls, that and revenge trading, which I'm sure a lot of traders have that difficulty as well in the beginning. You don't like losing, so you keep opening positions thinking you have a better entry, whether that'll be a long or a short. And market just keeps on ripping against you. So here is where I messed up. I had a short on the Qs on NASDAQ right at the deviation of this high. So we came back up here. Let me just give you a background of the trade. There was an upward trend line. So every time we would hit resistance, we were making higher lows. So that tells you, okay, the bulls are still stepping in, they're defending their area. There's a high likelihood that we can go up, and where can we go up to? Possibly the high that sticks out like a sore thumb. This wasn't a question. We weren't going to reach this at this point, at least. Okay, this was my train of thought. And as soon as we got that wick here, and I remember I was close to blowing the account because I had a trade open here and I didn't take profit, or I didn't think it was going to go back up and wick that high. And sure enough, came back up, wick that high. If this was any other account, like if this is a funded account, I still know within parameters that if it wicks here and it rejects on the hourly basis, I'm fine and I can hold that negative. You just can't do it on the 100 to a million challenge, because you need to flip it to make equity. That way you can trade. So you're kind of risking everything in the beginning. And that's the hard part Can you do it diligently and actually with proper risk management, risking, or entering 1 cent lot sizes? Yeah, but that's on Forex. You can't do that with indices. You have to enter a standard on indices. So let's get back to it. Cut my shorts here. Simply waited until that high was deviated. It was deviated as soon as we were coming back down. Entered shorts. Rode it all the way down here. At one time, that account was at about $800 and some. Okay, if I would have closed profits. That's where I messed up. I should have closed profit, because at the end of the day, let's go to the daily and let's look at the daily structure here. Daily structure is telling you that we are still currently uptrending. And let's get the path out so you can see. You got a high, low, higher low, higher high. This was a higher low at the point, lower high, lower low, but we're still closing within the area of that 20 EMA that's riding that daily trend. And then we got that push up, and then we took out that high, this main high, and then we came back down with the wick. Is there still a possibility that that was all she wrote and we can actually continue the down move that I've been waiting for? Yes, there's a possibility, just because we weren't able to close above that high. Now, did it pierce it similar to what I was referring to here, where it pierced that low, which I liked? Yes, but it did the same thing here. The daily pierced it, it wasn't able to close below. Daily pierced it, wasn't able to close above. So can we actually start to roll over? Yes. And I think it's very likely. Obviously, I can be wrong. Nobody has a crystal ball. It's very likely because of what I'm about to show you with ES. Oh, is my mic move? Hello, testing. Oh, okay, it's working. I was about to say, doing this live stream and there's no audio. So that's the first issue. The first issue is I should have took profit as soon. Okay, market closes at 2 o'clock, at 2 p.m. You have, here's 11, here's 12, here's 1, then 2 is here. So roughly this was your market close, your daily candle close, right here. And all we did is we just wicked that to continue to the upside. As soon as we close here, when the market opened, it gave me an hour of down that I could have took this profit off the table and just wait to see if it's able to make a lower high and continue to push lower, or if it's going to make a run at the highs again. So I was expecting, if it was going to make a run at the highs, I wasn't expecting this to go this high. Okay, at the very least, I was expecting something like this, where you have these lows here and then you get that rejection and you start to move lower. That didn't happen. On the contrary, we actually did reject, but we made a higher low. Here is your low, here's a higher low, pushed up higher. Looking at it now, it would have been way better just taking that profit. Obviously, hindsight's 2020. Way better to take that profit and just sit on my hands knowing it's a Friday and things can start to get wild and we can actually start wicking areas that we didn't deem possible. But here's why I think this could potentially be the optimal entry that I was looking for. This probably wasn't. The wick of this high probably wasn't the optimal entry. That's why I was so adamant in holding those shorts. I thought that was a high. There's no way we could push higher. And sure enough, the market's going to do what the market's going to do. And we pushed up higher. I should have seen it. It should have creeped in my head that it was a possibility. Like I said, as soon as I saw the daily close above the last low. Daily close above the last low. We're creeping above that. We deviated the 20 EMA. We started moving up. I should have just took profit out of the day, out for the day, out for the Friday, and that was that. But nevertheless, reloaded another 97 bucks to equal about 100 bucks of equity. This is very interesting. Once again, I didn't think we were going to take this high, but we did. And the reason why this is important is because if I just match up here, let's take this out. Let's remove the EMAs here. if I take this here, you can start to see, let me take out also the, let me see, canvas. No, that's not what I want. Hidden, okay. Once you take that out, you realize, okay, we actually did make a higher high, but we weren't able to close above it on the hourly, which is beautiful. That's what I like to see. That's what I consider the deviations to be very powerful. That's what gives me the optimal entries. Give me 1 second here. Sorry for that pause. Totally forgot what I was saying. But what's interesting here now is I wasn't expecting this move up, but I mean, you look at it hindsight, now it makes sense, and we can potentially start to roll over. Are we going to roll over to where I wanted the price to go initially? Probably not. It's a big move. I wanted ES to at least come down, trap the, like I said, on the daily time frame, we have here a perfect clean area of resistance. We flipped it, support, and it gave us that push higher. And now here's resistance that took us to that support. We held, once we broke above that resistance, we held that support here, and then we held that support here currently. So we are stepping upward. We're still trending higher, so it's still kind of dangerous to be taking shorts. But here's the key difference. There's a divergence between ES and NASDAQ. So ES was able to make a lower high. Okay. ES wasn't able to make a higher high. If it was able to make a higher high, just like NASDAQ, all bets are off the table, and I think you just wait for a pullback to enter longs. That would be my thesis. I would completely change. The reason why I'm still sticking to it is because, like I said, you have this move all the way up. It only moved all the way up on the 4 hour to test the 4 hour body as resistance, and we rejected off of it beautifully, and we're almost close to that area of support. It's bullish if we start trending higher come next week. That's bullish. Okay, I would not hold shorts anymore at that point. But if we start creeping, we start breaking this level here that we flipped, and now we're testing this area and we're breaking. That was the initial break. That's what I want to see. And now it like I said, there's a higher likelihood that this could happen because of the fact that we made a lower high, right? We're continuing to make lower highs, high, lower high, lower high, lower high. Whereas Q's, NASDAQ, high, higher, high. So we have a divergence here. So this can play out very powerfully. And I'm still expecting a down move. Do I expect it to go to my path here roughly around election time? Possibly. I just don't think we're probably gonna get that move down there. But anything could happen at this point. Volatility, when a lot of people are positioning differently because of elections and known volatility that's gonna happen, shit could go crazy. I could be wrong, and next thing you know, we gap up Sunday, and we're up here somewhere. I don't think that's very likely. I think there's a higher chance that we go lower. But that's the lesson for today. I have it written down here in my journal tool as well. Let's take a look at that. So I have here Friday, just to add on to what I was just saying. Overall market is up trending. when there is a pierce of the armor, which I'm referring to a NASDAQ on a 4-hour, which the pierce of the armor was take and remove of these lows here. When there's a pierce of the armor, you will on the 4-hour. If pierce on the armor on the 4-hour, note that the pullback can surprise you. Currently, so when I was writing this was at 1 o'clock in the morning, 2 o'clock in the morning. Let me see. Let me actually write that in because I was at 1 o'clock in the morning, I believe. So the pullback can surprise you. Currently on the 4-hour NQ chart, we are at 23 basis points above the 20 EMA with a candle close above. Let's see what Friday brings. So, and obviously we saw what today brought. I mean, it literally squeezed everybody. It squeezed me out of my position. You know, like I said, my position was here, and now price is below where I entered the short. But this is the thing. This is one of the issues that I have with marrying your bias or marrying the idea of profit. Because when you start calculating, okay, if I have this trade here and I think it's an optimal entry, I don't think price is going to come up here. Okay, the path that price could potentially trend to, I could make $1,000. I could flip this $100 into $1,000. Sometimes you fall in love too much with that. And when that happens, you tend to get squeezed out of your position, almost blow an account, and then you get that move back down. So that's one of the main things that I wanted to emphasize during this live stream is don't marry your bias. If you have a sweep, like another thing is like a note to self, if you have a sweep of a low and we're not able to daily candle close below that low, that major low, just get out the market. Get out the market and let it retrace. And nobody knows how far it's going to fucking retrace. Oh, I just cussed. Nobody knows how far it's going to retrace. That's where the patient lies. That's where the patient comes in. The patience comes in. We're still at resistance. All we did is we trended all the way back up to resistance. But we squeezed the positions. I got squeezed out of my position. And that's a very, very valuable lesson that happens because it happens over and over and over again. And people that want to use fibs, I've noticed that. And here's what I used to do back then is I would have a fib here, and as price is creeping up, I'm like, okay, I'm gonna enter more shorts on a 61.8, and that's what I did. And count went negative, and I was able to. I was able to day trade because the equity was negative $41. You guys seen the post on Instagram. I was able to day trade it and get it down to like negative 11. Just flipping some positions, quick positions. But you get married once again to the thesis that, okay, we broke resistance. It hit the 61.8. It's wicking. We're going to head down. And no, you just got squeezed again. And I've seen this happen over and over again. But like I said, you get married to the thesis, and then things like this happen, and you don't want to close. You're short in my case. And all it did is it gave you the best shorting opportunity that we've seen in the past since the 14th. So it gave you the best shorting opportunity. Because now, like I said, if the market starts to tank come Sunday, Monday, Tuesday, and we're starting to, I'll really get excited once we're starting to reach these lows. And if we're here and we start to bounce, I need that bounce to quickly get sold off, and it has to take that low out. Once it takes this low out and we have a daily close below this low, it's game over, because that's going to be a daily close below the EMA as well. So that's when I'll actually say, okay, there's a likelihood that we could go lower during the election. I'm thinking probable bottom within the day before the election or during the election. That's what I'm thinking. But what I'm also noticing is just read what the chart is telling you. Just read it. So if we do get a daily close below this low here, let's say we get a daily close this would help my thesis out, my bias, if you will. You don't necessarily have to have a daily close below this low. If we have a daily close, let's say come Monday, we have a close here, not below support, but we have a close here. Well, now you have a close below, once again, that 20 EMA. And you know, you leave your short positions once you have a daily close back above that 20 EMA. Once you have a daily close back above that 20 EMA, just take your profits. But if we're up here and then we close below again, now you let that trade run, and let's see if we can start to move lower and surprise people during the election. And let's see if we can start being able to buy some dips. That's what I'll be looking for here. Thesis hasn't changed necessarily. More or less, it's just being able to adapt and not fall in love with your position too much. Fall in love with the idea of making a lot of money or squeezing the entire move, because sometimes things like this happen and you lose an account or you start taking bad trades. Okay, that's pretty much it. Live stream's we've been streaming for about 20 minutes. Like I said, I love doing these because it's a online journal for me, and it keeps you accountable, and it holds you accountable. That way you don't do the same mistakes over and over again. Like I said, a little wrap up summary of the live stream. Daily did close below the EMA, but it did not close below the low that I wanted it to break structurally. So on a 4 hour, it did close below that low. So you can call it a piercing of structure, but daily is where it's most important because it filters everything else out. So you got that. That should have been my sign to take profit off of a short that I had here. And as soon as we came back up, you have this, once it didn't close below this low, you have to take your profit. That's one of the first signs. Even though it closed below that 20 EMA, that's a sign of strength. The fact that we weren't able to break the structure on the daily. If, like I said, when you're on the daily, it filters out everything else. And it's better to look at it on a daily than looking at it on a 4 hour. So and we got that squeeze. It's better to avoid these squeezes back up and not making nothing because you fall in love with your position, like I've been saying. So you get that squeeze up. If I draw this trend line sideways, you got a wick of that, and we came right back down. So my entries aren't bad. My entries, you can say, if taking profit, there were optimal entries. Just the only thing is not taking profit. It's not taking profit, especially when the charts is telling you to take profit, or at least reconsider your path. So you take your path all the way down here, and then you let it move all the way down. And once you move all the way down, then you're in the green. You're in the green, and you can make money. You can hold it. You can do what you need when you need, and be more versatile in your positioning. And that's where you can start flipping these accounts. It's a damn shame, though. We left a lot of money on the table. That account by the end of this week could have been at about $850 to $900 if I would have just took profit and just been patient and possibly not even trade today. If I was going to trade, every time I trade, and if it's on a Friday, it has to be within an extreme level. That's the only way I trade on a Friday, because usually price tends to pin, which means price would move down on a Sunday, and on Friday, all it does most likely is stay around the same price or go back to the open of the previous day, or whatever the case may be. It just chops up and down, and it pins itself. In this case, we actually just gigamooned all the way to the actual high, the recent high that we made, October 14th, and then we wicked it. Now we're coming down. So beautiful price action. This, like I said, come Sunday, if we're able to trend lower because of that divergence off of NASDAQ making a higher high and and ES making a lower high, there's your divergence there. Okay. So it's looking good. Thesis is still in play. It's just got whipsawed. I got short squeezed, and it is what it is. It happens, right? But that's it. Everybody have a great weekend.